What's going on, guys? In this episode of Should I Invest, we're going to be talking about DUK Energy and whether or not it is something that you should invest in the long term. All right, without further ado, let's go right into it. But before I do, go ahead and subscribe. Comment down below what video you want me to do next, and I'll be more than happy to do so. So with that said, let's dive right into it. First and foremost, I'm using this MARKETSMITH tool that allows me to find stocks to trade daily, as well as allows me to research stocks for my long term. You can see it's all right here. Gives us all the details we need, as well as tells us whether or not the funds are buying this or selling this. And of course, it gives us entry and exits for trades as well. All right, so that's the MARKETSMITH tool, and I have my handy dandy Excel sheet as well. That is right here. You can go ahead and use that. All right, so with that said, we're gonna type in DUK Energy here. Right here, we're typing DUK. Oops, DUK. Perfect. We're gonna see our EPS, PE. Our return on equity is right here. I have already populated that one, but you can see return on equity is right here at 9%, which is a red according to the Excel sheet. We want this to be at least above 15. That's why the Excel sheet has given it a red. Now we're going to look at total debt. Look at total debt. We're going to come here and look at income statement. Sorry, not income statement. We're going to look at balance sheet, and we're going to come down and look at the total liabilities. All right, so total liabilities is right here. We're going to take that number, we're going to plug it in, and then we're going to look at total assets. We're going to take this number and plug it right here. Perfect. So 1.4, so that's a good number. That means we can pay off our debts at least 1.5 times. Now we're going to look at current debt. So let's go look at current liabilities. We're going to take that right there, plug it here, and we're going to look at current assets, which is up here. We're going to plug that in as well, and 0.7. so you don't see this often. Actually, a lot of the stocks we've looked at in the past have been able to take care of their current debt with their current assets, with the exception of DUK. Now we're going to look at operating income. To do that, we're going to come to income statement. We're going to come down to operating income. That's the number right there. And then we're going to look at total revenue, and total revenue is up here under total revenue. We're going to plug that in as well. Boom. So we get a good 23%, which is something we want to see. So this is coming right down to the wire. Next thing we want to look at is cash flow. All right, to do that, we're going to go to the cash flow tab here on Yahoo, and let's take a look at whether this is increasing or decreasing. All right, so you can see right here in 2019 it was 8.2, 2019 8.8, 8.2, 5.9, and -6. So unfortunately that is decreasing, not something you want to see. And now we want to take a look at how much percentage management owns, and to do that we're going to come right here under ownership, and we can see management owns 1%. All right, so we're going to plug that in there as well. Okay, now we want to see if the fund ownership is increasing or decreasing. That is right here on MARKETSMITH. We're going to look at the number of funds, and you can see right here from September 2021 they start increasing a little bit going into September 2022, but from then on they've slowly been falling off. All right, so in the most recent months we have to say that this is actually decreasing, which in return is going to give us a fail. All right, so by just doing the Excel sheet here and trying to figure out whether this is a pass or fail, the sheet has told us it's a fail. Most importantly, simply because of fund ownership, cash flow, and the current debt to asset ratio. A lot of the times when the beginning of the Excel sheet has filled in the green, the remainder tends to do very well. This actual company seems to have their current debt to asset ratio all messed up and their cash flow decreasing, which is a concerning problem actually. All right, so with that said, hope you guys did find value in this. If you did, go ahead, like, subscribe, and comment down below what stock you want me to do next, and I'll be more than happy to do a video for you. And if you guys want access to this MARKETSMITH tool, there is a link in the description that you can download this tool for yourself. All right, thank you for watching, and we'll catch you on the next one.